Let's turn to earnings then, and we've got Metro Brands to talk about. It was a stellar Q3 for the company, in fact, robust margins. And you also had the fact that they had the highest store additions in the third quarter. The stock certainly reacting positively to those earnings, up about 20% at this juncture. We're joined by the management by Mr. Nissan Joseph, the Chief Executive Officer of the company. Thank you so much, Mr. Joseph, for taking the time. Is this a lot of pent-up demand that came through in Q3? And therefore, is this a one-off? Do you expect it to sort of, was it a wrinkle? Or do you think that this is the trajectory that you expect to go forward as well?
Well, good morning, and thank you for having me on the call. This is our first earnings release post our listing, and the numbers were quite sensational. We were up 59% in revenue. We were up 69% in EBITDA. What we're also excited about, to answer your question, is that we're seeing traction across all the 4 tiers of our cities where we operate. Number one, we're seeing traction and growth in all the 4 of our concepts, which is Metro, Mochi, and Walkway, and Crocs. And we're seeing continued double-digit growth in our e-com business. So to answer your question in a nutshell, we are seeing growth come from all walks, all tiers, all channels, all categories of footwear. Yes, there is some pent-up demand, mainly to do with wedding seasons that were kind of pushed into this period of time. But we're also seeing consistent and high growth in our casuals business, which is not necessarily a pent-up demand, which has been going strong for a while. We're also surprisingly seeing that formals are holding their own, so indicating that there is a little bit of a office movement come back again. So the trajectory that we've been on for the last 10 years has been 16% growth in our sales base and an 18% growth in our profit base. While we know there are other issues like Omicron out there, and we have shown rigorous discipline and financial austerity through those kind of times, we're confident that we should be able to continue to maintain our performance that we've maintained over the last 10 years.
I'm just wondering if it is that discipline that has led to the expansion of margins, Mr. Joseph, to 35%. Is that it, or were you able to take price hikes in select areas or across the board?
It is not so much the price hikes, but the favoring of our higher priced products. We saw significant growth in the over 3,000 rupee category. We also were fortunate that we don't have much of a business under the 1,000 rupee business that is going to be impacted by GST, so we're not exposed to that. What we're seeing on the margin is just continued discipline, and the fact that our own home brands continue to hold their weight. They grew 300 basis points as a share of business from 70 to 73% in the last quarter.
So it's a product mix. I'll come back to that in just a bit, Mr. Joseph, but I want to talk about raw material inflation, and something that a lot of manufacturers are facing across the country. What's the kind of impact to your business, to your earnings, and what is your ability to pass that on to the consumer?
So first of all, we have deep relationships with our supplier base. Some of them goes back as far back as 3 generations. So that's number one. We work closely with them to monitor the situation and also give them enough of our data so they can make forward-looking assumptions and therefore start to make raw material purchases and production schedules against it. Having said that, I think you'll also notice that our inventories are now stocked up because we anticipated to have some of these supply chain disruptions. We've buffered ourselves against it by ensuring both that we have the stock, but we've also been able to buy it at a time when raw material prices weren't going through. I think at some point there will be a translation of that to the consumer price, but at the same time, we won't be unique in it. We will probably be a little lagging in raising prices simply because we have forward bought both on our raw material side and on our inventory side. So we do see that headwind coming. I think we're well planned for it. We also have a deep supply chain capabilities that we will be counting on.
Maybe just a quick follow-up, at what point do you see that kicking in? Perhaps another couple of quarters at least. And also, I'm trying to understand, Mr. Joseph, the product mix that you were alluding to. As I understand it, the more premium products have gotten a larger share. Is that likely to continue in the near to medium term as well?
So I think it is our product offering in that segment that we've seen it. You know, Metro believes in providing affordable and aspirational yet premium products. So we want to make sure that we hit those three vectors. It's premium, but it's affordable and it's aspirational. You know, whereas you look at our business growth and we're focused on products that bring that value to the customer, one would anticipate that it is not in the 1,000 or 1,500 rupee range, as opposed to it's probably going to lean towards the upper end of that price range.
And the question in terms of the amount of inventory that you had, in terms of when you expect that to happen, when do price hikes come in for you?
So right now, short of the small price hike we've had to take for the GST adjustment for the shoes under 1,000 rupees, which is a very small, less than 13% of our business. We've not seen any price increases of a significant nature. Of course, we constantly keep looking at it very rigorously to ensure that we're not missing something. We're not seeing an across-the-board price increase for the next few months unless things take a turn for the worse.
My last question relates to your network and the avenues for your sale of products, right? You had a significant addition to physical stores. Could you give us what the trajectory is for this current quarter as well and for the current year? And also, where do you see the share of online sales going, Mr. Joseph?
Sure, great. So we could definitely opened 31 net stores in Q4, out of a total of 65 stores that we've opened this year in the first 3 quarters. We see that trajectory continuing to grow. That is our intent. We see lots of opportunities to grow our chains across the different tiers. And we also continue to see that e-commerce, to lead to your second part of that question, is more of a complementary channel to our business as opposed to being a cannibalistic part of the business. It is not discount-led for us. Over 25% of our sales come from omni-channel sales, which are all full price sales. And today that percentage of our business has crossed 10%. And I may add, it's due to the intense investments and resource allocation we've done towards the e-commerce channel that has helped it get from less than 1% pre-COVID to now in the double digits, and it's continued its growth path. So the good news there is we are investing in this channel. We are committed to this channel, and we're also excited about the channel because we don't see it as cannibalistic, but we see it as a 360 option for our consumers to shop.
Thank you so much, Mr. Joseph, for taking the time. Wish you all the best. A pleasure speaking with you.
Thank you very much.
Arguably, stock of the day today, Metro Brands. Metro Brands, arguably the stock of the day. We are slipping to a short break. There's more on the other side, so do stay tuned.